There is a real truth that most people won't tell you. Your first year as a mortgage advisor is financially brutal. You might write business today, but you won't often get paid on that for months. And if you don't prepare for that, you'll burn out, you'll give up very fast. So in this lesson, I'm going to give you a realistic picture of what year one cash flow looks like and how to manage it so that you survive the early stages. So let's talk about how broker income works. If you charge a broker fee, you'll usually get that when the application is submitted. Now your proc fee, which is the commission from the lender, that only gets paid usually after completion and often a month after completion. Then you have insurance commission too, which is paid once the policy goes on risk, and that is usually after completion or might even be at exchange. So if you meet a client today, they find a property in 6 weeks and it takes them 3 to 4 months to complete, you may not see any lender commission or insurance commission for 5 to 6 months. This is why your first year can feel so brutal, because you're working hard, but the money has not landed yet. You might have 1 or 2 early fees, but it's not consistent. Cash flow is lumpy, nothing for months, then a big payout, then silence again. You see, many brokers panic. They think they're failing, but actually it's just how the timeline works. So here's how you can manage your year one finances. Number one is expect the lag. You need to know that 4 to 6 months is normal before you're going to see any money. Budget carefully, cut expenses where you can, and keep a personal buffer in that first year. Third one is charge fees early. Taking your fees on application gives you income sooner. Don't push it to completion. You're going to make yourself broke. The fourth one is self-protection. This is the fastest way to generate early income and boost your cash flow to really build up your coffers. And the fifth one is keep your pipeline full. Remember that what you write today pays you months later. So consistency is everything. You need to be putting stuff into the top of the funnel. Now, the good news is once you get through that first year, things do change. And the reason is because remortgages start kicking in every 2 to 5 years, and referrals also start to compound. So by year 2 or 3, you're not just relying on new business, you got repeat clients and a growing base. But you only get there if you manage to get through that first year properly. So here's your exercise for this lesson. On a blank page, draw a 6-month timeline. Mark month 1 as first case submitted, then add when fees, when proc fees, and when protection commissions are likely to land. And you'll see very visually how income lags behind activity. This will give you a realistic view of cash flow and stop you panicking when money doesn't arrive straight away. In the next lesson, we're going to build on this by looking at how to boost your income per client, so when you make money, you can make more money from each case you write.